Breaking news as America launches a global tariff war. It's big news. 25% tariffs on Mexico, on Canada, 10% on their oil, which actually flows into America to be refined and then sold on. It causes inflation. 10% tariffs on China. Perhaps shouldn't be unexpected, but did Trump actually give himself a problem, give Americans a problem, or is there some benefits? Let's see. Well, first of all, when you get these tariffs, people retaliate. Already, Canada has put in a tariff of 25% on American goods, starting, guess what, next week. They're going to increase it. China has said they're going to make a complaint to the World Trade Organization because it's unfair, but they've also said they're going to retaliate and add tariffs to American goods. So, of course, when we put tariffs in, it means that goods go up in price, inflation is higher, interest rates go higher. It means that the dollar is going to increase. So you've got a strong dollar already. That, of course, causes American companies that export goods issues, makes it more difficult, makes it more expensive. You're buying an Apple phone, it's going to cost you more. Why? Because if the dollar gets higher, then what you pay in sterling, in euros, or other currencies around the world means you pay more. So is it going to actually benefit America? Well, of course, it can raise some money. But at the same time as raising money, it affects profitability. Trump says, great, but I'm taking in the money, I'm going to be able to reduce taxes. Okay, maybe he's right, and maybe there's some benefit to the American people, but it's a big maybe. Right now, we're seeing that the market is going to have, at the minimum, short-term disruption. In other words, volatility, because the market has to adjust. So if you've got stocks and shares, make sure that you're aware there's going to be an adjustment period. Doesn't mean you should necessarily sell, but it means growth companies, particularly ones with debts, are going to struggle. Growth companies that are selling out of America into other countries. Stronger dollar makes it more difficult. Europe reduced its interest rates last week, means that what happens is the euro comes down. So you're now in a situation whereby, sure, you may get tariffs on Europe, but at the same time, the currency goes down. That means that they can export less expensively. It means countries that export into countries like China from Europe, that means their goods are actually cheaper. Okay, and certainly if you're comparing it to American goods. So right now, if you're investing, where would you go? Okay, well, you'd go healthcare, you'd go utilities, you'd go into government bonds as interest rates go up because you're gaining a good fixed yield. Why take a risk? You talk and look to a financial advisor. You might invest, as I personally would look at, European banks. Why? Lower interest rates, they're in a good place. They've actually got a competitive advantage. They're lower multiples, good opportunities. Of course, you also see opportunities for digital currencies. Why? Again, when you're in that situation, then people tend to look for alternatives. Gold has risen by over 30%. Expect it to increase as people look for a safe haven to put their money. So right now, if you're investing money, expect volatility, expect opportunities, and also go for healthcare, go for industries which are going to make money in this type of environment. You subscribe to my YouTube channel. I'll keep you up to date. Fast changes, fast changing world, good opportunities, but make sure you're aware of what's going on. Okay, talk to an advisor and keep up to date by listening to my YouTube channel. Fast, concise updates.